The $70 billion deal that everyone missed. In December of 2025, a blockchain project that very few have heard of have closed the deal to digitize trade for 55 African nations. $70 billion in new economic activity. The World Economic Forum, Tony Blair Institute, and a 10-year-old technology that doesn't use blocks or chains. This is Iota. And if you don't know what that means, you're about to understand why institutions have silently been positioning themselves before retail even knows it exists. There's been three announcements in 1 week: a complete protocol rewrite, US institutional custody, and zero transaction fees. We're going to break it all down. In November of 2025, IOTA announces ADAPT, the African Decentralized Administration and Protocol for Trade. It's not a pilot. This is infrastructure for the entire African continent free trade area. Now, this includes 55 countries, 1.3 billion people. It's a $70 billion deal with the potential for annual trade unlocked. Now, here's what makes it different from other blockchains for the Africa story. It's backed by the World Economic Forum, the Tony Blair Institute, and the AFCFTA. The problem they're solving right now is that trading between African countries is harder than trading with Europe or China, go figure. Documentation takes weeks, border delays cost billions, small businesses can't access trade finance. IOTA is basically building the digital rails to fix that. Phase 1 launches in 2026 across pilot countries. So by 2035, the goal is full integration across 55 nations. This is what actual enterprise adoption looks like at scale, not just another DeFi protocol promising some high APY. But here's the part that not many are talking about. IOTA was chosen because it can handle millions of microtransactions with zero fees. So when a farmer in Kenya needs to verify shipment to Nigeria, they can't really afford the $20 Ethereum gas fee, and that's fine. IOTA just charges basically nothing. Now, IOTA isn't another speculative crypto project. It's critical infrastructure backed by institutions that basically are not gambling. We got the World Economic Forum, Tony Blair Institute. In May of this year, IOTA launched Rebased, the most significant protocol upgrade in the project's 10-year history. Basically, think of Ethereum as they move from proof of stake, right? But it's more fundamental than that. So, what's basically changed? IOTA introduced delegated proof of stake validators, fully permissionless, native staking, and support for two smart contract languages, not one, but two: the Ethereum virtual machine compatibility and the Move virtual machine. The security first language from Meta and Facebook team. So when we think about the Move virtual machine, this is critical. Solidity, Ethereum's language, has caused billions in hacks, reentrancy, attacks, overflow bugs, you name it. Move was built from the ground up to prevent all of those exploits. Digital assets are treated as resources that can be copied or accidentally destroyed. For enterprises handling real world assets, this is non negotiable. So let's look at the numbers: 50,000 transactions per second with sub-second finality. Now, Ethereum does 15, Solana does 65,000 in theory, but it crashes constantly. IOTA is running this in production, not testnet production. But wait, IOTA used to use this weird thing called DAG. That's not really a blockchain. It and this is why it actually scales. So hold that thought and we're going to come back to that. But another key insight is that the Rebase upgrade has transformed IOTA from an experimental protocol into an enterprise grade infrastructure. The Move virtual machine addition is a direct shot to Ethereum security vulnerabilities, and it's targeting institutional money. In December of 2025, relatively about 3 days ago, BitGo added IOTA to its custody platform. If you don't know BitGo, they're the institutional custody provider, 64 billion in assets under custody. It's used by roughly 5,000 institutions. It's regulated out of South Dakota with 250 million in insurance. Why does this even matter? Because IOTA just got the keys to the US market. That's pension funds, hedge funds, family offices. These players only touch assets with regulated custody. No custody, no institutional money, period. BitGo also runs back-end infrastructure for major exchanges. That means exchanges using BitGo can now offer IOTA instantly. BitGo announced that on this IOTA's 10th anniversary, which this isn't random, this is a coordinated positioning. Here's another key insight. BitGo integration is the difference between interesting technology and investable asset class. IOTA just crossed the institutional adoption moat that 99% of crypto projects never will. Okay, let's talk a little bit about the LayerZero connection, cross-chain liquidity unlocked. In December 2025, we've seen another announcement. IOTA basically integrates LayerZero and Stargate. So if you're not deep in crypto, this may sound a bit technical, but here's what it actually means. IOTA now connects 150 other blockchains. You can move assets from Ethereum, Solana, Avalanche directly to IOTA and seamlessly. This definitely solves the liquidity problem every new chain faces. You don't need to start from zero. You tap into billions already on other chains. So LayerZero is the protocol Binance, Coinbase, and every major DeFi platform is already adopting. IOTA just plugged into basically the main highway of crypto liquidity. A key insight. Interoperability is the feature institutions demand. Nobody wants anything that's siloed or walled gardens. LayerZero integration means that IOTA can access liquidity from the entire crypto ecosystem. All right, let's talk a little bit about IOTA's technology. DAG versus a traditional blockchain. IOTA doesn't use blockchain, it uses something called DAG, directed acyclic graph. It's called the Tangle. Now, what does this actually mean? Traditional blockchains, transactions queue up in a single file line, basically, waiting for miners to add them to the blocks. Think of it like a grocery store with one checkout lane, right? DAG, every transaction validates two previous transactions. There's no queue. Everyone checks each other out basically simultaneously. This is why IOTA has zero fees and it can scale infinitely. No miners to pay, no block size limits. You know, the more people that use it, the faster it gets. The blockchain is the opposite. More users equal congestion. For IoT, the Internet of Things, this is critical. When your smart fridge basically orders milk or when your car pays for parking, when sensors track supply chains. These microtransactions are basically worth cents. So you can't pay $5 in fees for a 10-cent transaction. You see what I'm saying? And that's basically what you would experience on Ethereum. Iota is the only infrastructure that makes machine to machine economy viable. The EU is piloting Iota for digital product passports. Basically, what this does is it tracks products from manufacturing to recycling. When every product needs a digital twin on chain, you need basically a feeless transaction at scale. Okay, lastly, why does all this matter in 2026? Let's connect the dots here. Iota hits three major milestones in essentially 1 week. We've got the BitGo custody for US institutions. We have LayerZero integration for cross-chain liquidity. And then we also have the 10-year anniversary with Africa Adapt launch scheduled for 2026. Most crypto investors are basically chasing the narrative. Iota is building infrastructure. Institutions don't care about favorite DeFi token. They care about regulated custody, compliance, and solving an actual business problem. In 2026 is when Adapt pilots launch in Africa. That's basically when the EU digital product passport is at scale. When Iota devices hits critical mass, Iota will position itself before these markets explode, not after. Is it guaranteed? It's not guaranteed. Iota has been around for 10 years and still hasn't moved. The Tangle, it was controversial. Adoption was slow, but infrastructure plays don't move fast. They essentially compound. Now, here's a key insight. Iota is a contrarian bet on enterprise blockchains actually working, not through hype cycles, but through decade-long relationship building with governments, Fortune 500 companies. So the payoff time is relatively around 2 to 5 years, not 2 to 5 months. Thank you. I hope you enjoyed.